Good morning, everyone. We're just waiting for a few more people to attend, and we'll start in about 2 minutes. Just going to wait 1 more minute, and then we'll start today's webinar. Okay, welcome to today's webinar on win contracts, fulfill orders, and get paid. Thank you for joining us today for this insightful webinar with UK Export Finance. We are thrilled to have you here as we delve into the opportunities and support available for businesses looking to expand their reach globally. My name is Laurie Goodall. I'm one of the International Trade and Customs Advisors here at the Thames Valley Chamber of Commerce. We are accredited chamber for Berkshire, Bucks, Oxford, Swindon, and Heathrow. Before we start, I would like to state today's session is being recorded. The recording session will be made available on our website. If you have any questions, if you'd like to ask questions, please use our Q&A facility, and we'll endeavour to cover some during the session. Otherwise, we will answer following the webinar. So on to today's webinar. In today's session, we will explore the various financial products and services offered by UK Export Finance, designed to help UK companies succeed in international markets. Whether you're a regular exporter or just starting out, this webinar will provide valuable insights and practical advice to help you navigate the complexities of global trade. With this, I will hand over to today's speaker, Jonathan Dowell. Jonathan has been with the UK export team since 2014. Currently, Jonathan works as an export finance manager, acting as a local point of contact for exporters and businesses with export potential wanting to find more information about UKEF. Prior to his role, Jonathan was a senior underwriter within UKEF, supporting UK exporters in civil infrastructure and energy sectors. Over the course of his career, Jonathan has specialised in customer relationship roles, providing guidance and services to corporate and professional clients. He brings to the role considerable knowledge of the finance available to help companies export and relationship management experience. So without ado, I will hand you over to Jonathan.
Thanks so much, Laurie. I trust everyone can hear me all right. Fantastic to be here, and thank you for that introduction. So yeah, I'll talk you through what UK Export Finance is all about, and really the main themes there, as you can see on the opening slide, is how businesses can win contracts, fulfill orders, and get paid. So next slide, please. Brilliant. So I thought, it'd be appropriate to start with our mission statement, which is to advance prosperity by ensuring no viable UK export fails for lack of finance or insurance, doing that sustainably and at no net cost to the taxpayer. And this, I think, is a good point to start on because it really lays out our raison d'etre and really places the emphasis on the fact that we're there to complement, not compete with the private sector and or banking and finance. So we're there to really pick up the pieces that are left behind when there's no appetite from banks and insurers. But we're obviously keen to help support all viable exports that are out there, which would otherwise fail. Next slide, please. So we are the world's first export credit agency. Now, we're not the only export credit agency out there. If you look across the majority of the developed nations out there, each one has got one. And again, as our mission statement pointed out, they're there to help complement the private sector. They're there as an arm of government, of the state, to help to help businesses get their exports over the line, be it by rewarding them with finance in the form of loans, essentially, or it could be bonds, or it could be credit insurance policies as well that they underwrite. So we'll have a similar kind of role to play, and we do in fact collaborate as well on very large projects. You might see us teaming up with maybe the French ECA or the Dutch ECA or whatever, because we do have those similar roles. We work right across government with the Department for Business and Trade, most notably, but we sit within Treasury. Our spot is on the 3rd floor in the Treasury building in Whitehall in central London. So we do have that close collaborative relationship with them, as well as with the likes of Laurie and his team at the Chambers. We work up and down the country. I'm one of 24 advisors or export finance managers. And so we try to, really utilize the full set of resources at our disposal in order to bring to the fore the best support for businesses, the majority of whom are SMEs. And the other thing to point out is, whilst we work with banks and insurers to issue our own UKEF-backed products and policies, we also work with the private sector on occasion where, even with our guarantee, banks can't necessarily support a customer. So we work with lots of brokers, network of brokers, and what we call alternative finance providers as well. But yeah, as I mentioned, we're here to complement, not compete. We're not trying to undercut the private sector. We're not trying to issue, loans that are super cheap, and we're just there to fill a gap. So the bank's still got to be on board with one of our loans or bond issuances, but we give them a guarantee for typically up to 80%. But I'll come on to the nuance in the next few slides. Yeah, as I said at the beginning, it comes down to 3 main themes. It's export insurance to ensure that you as an SME get paid for what you deliver to your buyer overseas. Buyer finance, which is where we advance a loan to an overseas buyer in order to import goods and services from the UK. And then working capital products, which, as it suggests, is again loans, but working capital loans are more directed towards a UK supplier in that regard for the UK exporter. Next slide, please. So we work across all sectors. Obviously not if it's a banned, prohibited sector, obviously then we won't touch it. But other than that, we are sector agnostic, and be it goods or services and intangibles, we can work across the piece to deliver our support for businesses. So I previously worked, as Laurie mentioned there, in the civil infrastructure and energy division as an underwriter, so looking at the the term sheets and loan agreements specifically. But equally, there were teams across the way on the floor who would look at things like defence, things like the renewable sector. So really, there's no sector that we won't look at, and it's important also to point out that we work with SMEs and large corporations, including overseas governments as well, because you could have a Department for Energy of Angola, let's say, that want to build transmission lines, and they actually would be the borrower of a UKEF loan. The win for the UK in that scenario is that there would be UK supplies going into the building of those transmission lines, and that's just one of many examples. We provide support to over 200 countries, so there's very few countries out there that we're not on cover for, and I'll come on to how we maybe come to those decisions. In short, we have a team of in-country, we have a team of in-house country economists who will look at the whole macro economic landscape of a particular country and then divvy up the amount of money that we've been attributed by the Treasury to those specific countries. And I'll touch on that in the next couple of slides. And then, we can work in multiple local currencies. So again, this is typically probably for the overseas loans that we provide to overseas governments and corporations. But if it's easier for them to repay the loan in their local currency, then they're able to do that. If you're an UK exporter involved in something like the building of a school, hospital, railroad, or what have you, you would still obviously be paid in sterling, but the loan that we advance to that end buyer in the country could repay that loan in their local currency. And obviously this is great for countries that have a shortage of hard currency, dollars, pounds, euros, that sort of thing. Next slide, please. So as a snapshot then, to hopefully give you an idea of how big and how wide our reach is. Last year, we provided £8.8 billion worth of new financing to UK exporters, which added 3.3 billion gross to the economy and supported around 40,000 UK jobs. So it does have a real impact on the day-to-day lives of businesses here in the UK, and predominantly SMEs as well. It's in the region of about 80% in terms of volume of businesses that we support are actually SMEs. So although we do deal with the big players out there, the Rolls Royces of this world, the majority of the loans we put in place are for SMEs. The next slide, please. And so this was the budget we've been given by Treasury. So 60 billion, it used to be 50, it's up to 60. And you can see there we've actually got 47 currently exposed or on lend being repaid as we speak. So a lot of these loans, or all of these loans, are they are loans. They're repaid. There's a premium payable on each of them for these overseas loans. And so at any given point, that number can move and shift slightly, but that headline figure of 60 is divvied up between countries. So if a business calls me and says, "Oh, we're looking to export to, I don't know, Benin," we can check the database and say, "Oh yes, we've got £200 million available on Benin. There's a exposure of X amount." but we can make that possible potentially, subject to X, Y, and Z. But that's essentially how it works. So it is a first come first serve policy. So if a country, and this has happened, if a country does get there's more demand than supply in a sense, then we will essentially have to come off cover, at least temporarily, until that loan is repaid. So yeah, that's just a bit of a snapshot. And obviously, if you're an exporter here in the UK, asking for £100,000 loan, that'll still come off the headline figure. Obviously, it won't be as impactful because the numbers are smaller. Next slide, please. Yeah, I mentioned 200 countries, 200 plus countries out there in the UK. We work with so my team of 24 based here in the UK is mirrored, if you like, by a team of a similar number out in the regions right across the world, as well as colleagues in the Foreign Office and DBT overseas as well in embassies. We do try and provide a holistic 360-degree approach to everything we do. We try to bring opportunities overseas to the UK, and in fact, next week I'm attending a what we call a share fair, which is an opportunity for UK suppliers to come and hear about a large infrastructure project taking place overseas, for which UK support is required. UK suppliers will be invited, and they'll have the chance to speak to procurement managers in the room of the host project developer, and so that's not an opportunity to obviously bid in that scenario. So this particular one is a road project in Benin, on the border. So behind the scenes, UKEF will be supporting that entity with a large loan repayable over typically like 10 years, if not longer. And then what makes it eligible for them to get that loan is UK suppliers participating in that project. So you would have the chance, if you're an SME listening to this, and it's appropriate to what you do as a business, you'd have the chance to go along, meet the procurement team of that developer, bid for your services, safe in the knowledge that that end buyer of your goods and services will be backed financially by UK Export Finance, and you too, as a supplier, could obtain a working capital loan to help you fulfill that contract as well. So that's it's a road project, but it could easily have been any other type of project. Transmission lines. In the past, we did oil and gas. We don't do that anymore, but it could be renewables project. It could be railway. You name it, a school, a hospital, a bridge, that sort of thing. So typically, the large infrastructure projects is where is the circumstances in which we would host a share fair event. And next slide, please. So the products are sort of all laid out here, and obviously you can see there's an overwhelming number of them there, but essentially they break down into three categories. On the left, we've got the buyer finances. We've got buyer finance loans, which are, as the name suggests, loans that we make to the overseas buyer to import goods and services from the UK. Middle column touches on the exporter guarantees. These are loans to SMEs here in the UK, and they could be bonds as well. And then in the final column over on the right hand side, you've got credit insurance. So that's available to UK exporters here wanting to ensure that they get paid by their overseas buyer. So particularly useful if you haven't already got a relationship with an overseas buyer, or that their payment is in your view not secure, not safe, not reliable, and so you'd like to take out credit insurance against them, and that's something we can do in-house as well. So I'll touch on most of these, but I'll certainly focus in on the center column, which is the exporter guarantees, which is like the loans and the bonds and in particular the general export facility, which is most applicable to the majority of people tuning in today, but also listening throughout the next number of weeks and months. Next slide, please. So the export capital working scheme, that's the first one that's mentioned there. So the model, and you'll hear this theme consistently without. The model here is that we have a number of banks signed up to our scheme, the likes of all the high street ones, you know, HSBC, Santander, Lloyds, NatWest are all featured, including a number of others that might be lesser well known. But essentially what they do is they sign up to our scheme. We provide them with up to an 80% guarantee for the risk that they're taking, and they'll advance loans to you, the SME, for the purpose of an export. So in that export contract, and this is a contract specific facility. In that export contract, you'd have a minimum of 20% UK content. So that's goods and services emanating from the UK. If they're goods, typically they'll attract a Chamber of Commerce certificate of origin. And if they're services, we've just got to, you know, check with you that we're comfortable that that is emanating from the UK and it's been paid to people in the UK. And so what does that do really? Well, a couple of things. It can, the first thing it does is de-risk the bank. So the bank is put in a more favorable position when confronted with a loan that's been asked to issue to a buyer, to a borrower, sorry, who the bank has got UKEF backing for. So we will essentially step in and repay the bank at least up to 80% of the loan amount should the exporter fail to be able to repay it. So that can sometimes make the loan slightly cheaper in terms of the interest rate, not always, but it can do that. But more often what it can do is provide more capacity to the bank. The bank might be already willing to lend, let's say £50,000 to this particular business, but with us supporting the bank behind the scenes and giving that government guarantee, more often than not, it provides the bank with that level of security and assuredness that it can then move the dial on their appetite and provide them the opportunity to maybe lend £100,000 of loans. So, you know, we won't necessarily just turn a bad credit into a good credit overnight. That's, you know, we can't wave a magic wand, but what we can do is give the bank a bit more confidence and capacity to move forward. Next slide, please. And again, here, much like the 80-20 risk share split that we share with the banks, what I just spoke about can be applied to a bond. So an exporter might have been asked to issue a bond by its overseas buyer, and that could be anything from, you know, a bid bond to an advance payment guarantee, a performance bond, a retention bond. In any event, UKEF can stand behind that bank issuing the bond, and what that can effectively do is reduce or even allow the bank to do away entirely with the cash collateral that it often asks the borrower to put up against that bond. So let's say you've maybe been asked by an overseas buyer to put up a bid bond of 10% of the contract value. Let's say it's £10,000. The bank might ordinarily have asked that business to put up the same amount in cash as collateral, as security, essentially, to the bank. Us being involved behind the scenes, giving that bank the 80% guarantee, might allow that bank to at least reduce the size of that cash collateral. So what it obviously does is free up working capital for you, the business, to get on with, you know, fulfilling the contract and paying for, you know, everything that's involved, raw materials, staff costs, things like that. So it's a great scheme that we run alongside the loan scheme as well. Next slide, please. And then export insurance. So as I touched on a couple of slides ago, if you're entering a new market where there's maybe a new buyer with whom you're dealing with, there's no track record, there's no payment history there, there's essentially little trust or at least just little experience. Well, in that scenario, you might go to your private insurer and they might say, actually, we'll cover for X or Y country, or we can't cover that particular single debtor risk because, I don't know, the accounts don't look sufficiently robust for them. In that scenario, you could come to us and we could underwrite it in-house, hopefully, and insure the contract of up to 95% of its value. So essentially doing the job of a credit insurer out there in the private sector, but in-house at UK Export Finance, where we've got perhaps more risk appetite and a more, how can I put it, a larger goal, not simply sort of making revenue off policies. So our idea is to obviously support businesses, support business growth, UK jobs, and exporting. So we've maybe got more appetite as a government department than maybe a private insurer who's more calculating of the risk that he or she is taking. So this is a great policy to have even alongside a loan facility that you might take out with UKEF, just to ensure that the payment, you've got the funds to fulfill the contract, but B, you've now also got that added security of knowing you'll be paid. Because obviously your buyer overseas doesn't pay you after a fixed number of months, you can come to us, typically 6 months, no claims waiting period. If that is the case, you can come to UKEF and we would pay you out. Next slide, please. And in bond insurance, it's similar in some ways to the bond support scheme that I touched on 2 slides ago. But essentially, if you've got a bond insurance policy with us and it's called unfairly, we would pay that out to you, and then we would make efforts to try and recoup that loss from our end. But again, it's just another way of de-risking yourself as an SME if you're dealing with businesses overseas, where there are bonds in place, and ensuring those bonds against being called and.
Hi, Jonathan. I think your volume's gone. Just you know.
Is that any better now?
Yeah, perfect. Thanks.
Okay, great. So the export, so the general export facility, again, benefits from an 80% guarantee from government. So it's still the same banks issuing this facility, much like the others, but it's more versatile in its application, and is a bit more user friendly both for the banks as well. So what differentiates this from the previous working capital loan I mentioned, and you might recall I mentioned that last one was contract specific. This is non-contract specific. So really it comes down to you as a business. Do you do some degree of exporting? And if so, you can qualify for this export facility. You don't necessarily have to have an export contract that has 20% UK content within it to be eligible for our support. Furthermore, the support that we offer, be it bonds or loans, under the GEF facility can apply to domestic trade and even international trade that is of importing nature, as well as exporting. So it's applicable for a wider number of activity, and the restrictions upon it in terms of UK content are much more flexible. So I'll touch on UK content quickly now, as it's one of the key differentiators between this scheme and the previous one I spoke about. On the previous one, you'd have to have an export contract, and only an export contract, and you'd have to show the case that there's 20% UK content within it. Under this scheme, You could have an import contract. You could have a domestic UK to UK contract. You could have an overseas contract. And any of those, it doesn't really matter the level of UK content within them. What does matter is that you as a business, as an SME listening in on this, has export sales that amount to 5% of your turnover, and that's been the case consecutively over the last 3 years, or that in the last year you've done export sales that amount to 20% of your turnover. So that's the sort of new metric that tests eligibility, and as I'm sure you'd agree, that's a bit more flexible and more kind of user friendly, if you like. So that's the key differentiator. Next slide, please. And just briefly as well on these schemes, you know, it mentioned there up to £25 million. So yeah, these loans can be quite large loans, repayable over 5 years. They can go beyond £25 million, at which point it's basically called the Export Development Guarantee. This is this slide we're going to touch on now. But equally, it can be all the way down to, you know, so there's no key number, right number or wrong number. It's whatever the business needs at that particular point in time. And essentially, you know, it's always a UKEF guarantee that will provide the bank with 80% of cover. We wouldn't charge any side premium or fee alongside that. The bank will obviously charge its interest rate, and as I say, it can sometimes be influenced by our participation in the background. So hopefully that covers that. And I appreciate, you know, there's quite a lot of numbers and percentages, and that's what I'm here for, to try and clarify any questions you might have. So feel free to drop those in the chat, or raise them in the Q&A, or indeed take it offline with me afterwards. I'll leave all my contact details. I and 24 others are based up and down the country, and we're there to try and dispel some of this and try and get to the key bits of information that you need to know. But for the purpose of this webinar, I'll obviously touch on all the detail and make sure I leave no stone unturned. And so on that point, you got the Export Development Guarantee, EDG, which is essentially what, very much like the scheme I just mentioned, but it's for facilities over £25 million. Again, it doesn't have to be linked to a specific export contract. And yeah, it's an 80-20 risk share split with the bank, repayable over 5 years, or even up to 10 years if it's in a clean growth sector. So yeah, and with all these schemes I've mentioned to date, bar the export insurance, credit insurance policy, they're accessible through our banks. So you wouldn't have to duplicate conversations with us and your bank. You just go straight to your bank. Let's call it HSBC for argument's sake. Speak to your relationship manager. They will decide whether it's applicable for UKEF backing, and in the background, if you like, they will apply for our guarantee. So it's not even something you might necessarily be aware of, but it's certainly there to help you indirectly, because the bank will benefit greatly from our 80% guarantee for the risk. Next slide, please. Yeah, and I've touched on this UK content. So 20% UK content, you could argue, is quite low for the contract-specific facilities, and indeed it is. And what that's really doing is allowing for businesses to pool their supplies from all over the world. You know, we recognise that business is a multifaceted, multinational arena, and so if nothing else, just for cost effectiveness, businesses often have to import goods and services in from overseas, but that doesn't mean it's not eligible for our support. So as long as there's 20% UK content involved, the rest can be up to 80% foreign, but we'd still provide you with a loan for the entire contract. So hopefully that's obviously a good thing. On the general export facility, the GEF, and indeed the EDG. You mentioned the minimum of 3 years of export sales that amount to 5% of turnover. That that just brings that UK content eligibility criteria down even more, so it makes it even more flexible. Next slide, please. Yeah, and I touched on earlier that we look at goods, both, and then also services and intangibles. Such that the nature of business is these days we can get behind most things. Obviously, that doesn't mean that UKEF can be on board for this. Obviously, the banks obviously got to match our level of appetite as well, and be able to put the value on certain intangibles, and some banks will and some banks won't, and that's obviously the nature of the beast. But certainly UKEF is there to support all types of exports, not just goods. Next slide, please. Yeah, and I mentioned the supplier fair earlier. There's been a good number of these since they were launched in 2016. And as I said, they're large scale, typically infrastructure projects, which are identified overseas and then brought to the UK to see who within the UK supply chain can participate. And these are great events that are free to attend, and it's a golden opportunity to meet with a project sponsor and bid your services and goods into the project. And UKEF finances the project, finances the overseas buyer, but as I said, can also put in place working capital loans or even bonds for you, the exporter, participating in the project. So these are something you can get in touch with me about, and I can keep you abreast of up and coming ones. I say there's one next week, in fact. It'll be in central London. It's for Benin Road project. The closing date on that might have been and gone, but I'm happy to look into that if anyone is interested on that particular case. But there are lots of these that do turn up, and happy to keep you abreast of those. Next slide, please. This is one example. I mean, I'm conscious of time, so I won't delve into too much detail, but I think I've touched on the main emphasis of these and the main benefits to SMEs of these. Next slide. And that actually does bring us to an end quite timely. So good. So I'm an export finance manager. There's 24 of us based up and down the country. We are there as your first point of contact if you're an SME in the UK and want to get in touch and find out how it all works. So even if you retain nothing from today's webinar, that's okay, because you could just take my name and email address, contact number, and get in touch. And I'll personally, if you're in Berkshire, sorry, I'll come and meet with you personally, face to face, or we can have an MS Teams chat or something of that nature, and I can talk you through how all of this applies to you specifically for your business and your particular contract that you might have with an overseas buyer, or indeed a UK entity as well, because the GEF facility does allow for financing domestically as well as internationally. And we can advise on the best types of finance, the best product, the best type of facility, and really fill in all the gaps in knowledge that you might have, and just clue you up on how it all works. We can crucially as well put you in touch with the right people within the banks that are scheme participants on our scheme, and that's really key to ensure that conversation you're having is going somewhere, because the bank's a large place and UKEF is not that well known or not that mainstream within the banks. So it's key to speak to the right person. And obviously, as and when applicable, if there's credit insurance policies that need underwriting, we do that in-house. And obviously, I would be that conduit to allow that conversation to happen with our underwriters in-house. And I would take an application form from you and help guide you through that as well. And then just finally, if there's support you need that falls outside of our schemes, again, that's something I can assist with. I can put you in touch with brokers. We have a large network now of brokers and alternative finance providers who can provide you with all manner of support, from invoice financing to equity to, you know, you name it, typically standard loans as well. And that's something where I can play a role and make introductions. So hopefully I'd be a good point of contact for you to take away from today's webinar. Happy to answer any questions now in the chat box or in the Q&A, but equally happy to take anything offline as well from anyone viewing. Thank you very much.
Thanks, Jonathan. I thought that was massively informative. Like I say, the UK is what, the 14th biggest exporter currently still? Is that the ranking still? Something
Yeah,
like that, isn't it?
there.
So
yeah, I think so. Yeah.
So yeah, so like I say, for SMEs or any companies, don't be put off by exporting. The support is out there. Like I say, Jonathan can put you in contact for that financial support, and obviously Thames Valley Chamber is there to facilitate, the other obstacles in the background, especially with documentation and customs procedures and stuff like that. So, is there any questions? I mean, okay, as I said before, the webinar is being recorded, so it's like I say, there's some key sort of nuggets of information for people to sort of use and sort of break down over a sort of different period of time. So this webinar, obviously we will send this recording out to those who require information when needed. So
yeah, and just to also, Laurie, just as an afterthought as well, I mean, we work with yourselves, we work with multiple interlocutors and third parties, and we also work with the Department for Business and Trade, so most notably with ITAs, international trade advisors based up and down the country, and they have sector specific knowledge, and they can provide guidance and advice on all manner of things that can help businesses who are looking to export get their marketing together, get a business plan together, get an export strategy together. They even run an export academy, which is really informative and it can help people just gain that key bit of knowledge. And so, yeah, as well as yourselves, we can put you in touch with the likes of them as well. Because what we do at UKEF is quite narrow in the sense that it is just sort of loans, guarantees, and credit insurance. So it's sort of the sharper end of just the finance piece. But obviously, a business looking to do stuff abroad might certainly benefit from that wider bit of advice. So that's just something, again, we can help with and put you in touch.
Yeah, brilliant, excellent. If we haven't missed any questions, like I say, we'll just give you 2 seconds if there's no other questions. So what I've done, obviously, following this webinar, obviously I've included some of the upcoming events that are, that could come in handy following this webinar. Obviously, we've got our next training workshop is Understanding Commodity Codes, Understanding the Tariffs. That's a great course coming up. And we've also got an event on the 21st of November, which I believe we should have a UK export finance representative there on focus with the UAE and Saudi Arabia. That's becoming a really popular event at the moment in November. So if you're interested in those markets, I would really recommend getting yourself booked onto that webinar. An event which is being hosted down in Reading. So we are looking forward to that event for sure. So, okay, no, I will leave it there. Jonathan, thank you very much for today's webinar. I thought it was very informative, and like I say, for businesses moving forwards, they will be able to come back and have a look at this information And like I say, if you've got any issues with that sort of side of it, we can obviously help put you in contact with Jonathan, and provide the support needed. So with that, I think we've finished. And like I say, I wish you all a good day.
Thank you all. Take care.
Thanks, Jonathan.
Cheers, Laurie. Appreciate it.
Thanks.